At Best Tax Pro, we provide tax debt relief, which is something I covered in a previous video. In this video, I'm going to give you a broad overview of 3 of the more common tax relief strategies, namely the Settle for Less with the IRS, or Offer in Compromise program, the Hardship or Currently Not Collectible Case Status, and the Installment Agreement, or Payment Plan with the IRS. Hi everybody, my name is Joshua Wibskowski with Best Tax Pro. We have a team of tax professionals with over 200 years of experience working with the IRS. Our firm is composed of tax attorneys, former IRS revenue agents and officers, CPAs, and enrolled agents from around the country. To determine if we can help you with your tax situation, we offer a free 30-minute consultation to discuss how we might be able to help you. Okay, the 3 most common programs we utilize and tailor to your specific tax situation are the Installment Agreement program, and that includes the Partial Payment Installment Method, the Streamlined Installment Agreement, the 1-year Installment Method, and all the other variations on the same theme of an installment agreement there are out there. But the Installment Agreement, the Hardship Case Qualification, and the Settlement or Offer in Compromise. And I'll go into detail with that last one first. Just what is an offer in compromise? That's when a taxpayer and the IRS or state set up a formal agreement about how you make an offer to pay less tax than the IRS or state says that you owe. And then if they accept, the IRS or state make a compromise on how much tax they can collect. There are 3 primary types of a typical offer in compromise. The first one has to do with doubt as to your collectability. This is where the amount that you offer has a lot more to do with how much you can actually afford to pay, which of course is depending and based on your financials, than on how much the IRS or state says that you owe. So your case is built up by implementing the only IRS approved method of calculating your assets, your income, and your expenses that show that you can afford to pay all or some or any of the tax liability. The second type of offer in compromise is all about casting a shadow of doubt on what your true tax liability really is. This is also based on using the IRS math method of calculating your financials to show the focus on how you don't actually owe some or even all of the tax liability that the IRS says you owe because it's not your responsibility. The third and much less common type of offer in compromise is effective tax administration. And that's just fancy words that mean painting a picture of your tax situation for the IRS that even though you admit and the IRS agrees that you owe the tax, and take it a step further, even though you might even possibly be able to actually afford to pay the tax, it would be a really bad PR move for the IRS to force you into paying it. I know, rare, right? But just think of this as a taxpayer or maybe a member of his family having a severe medical condition. And thankfully, this type of offer and compromise program makes the IRS take that medical condition into consideration and actually puts it in rank or order of importance in front of satisfying the tax liability. So, just so you know, many states have their own version of this offer and compromise program in place. There are no hard and fast rules. Each state has its own program or programs that are unique and different from the IRS. The second major tax relief solution that we offer is getting your case qualified as a hardship case or achieving what we call CNC status. This program requires you to use, again, the IRS approved method of calculating your financials to show them that it would be unreasonable for them to expect you to pay both the tax liability and meet your basic day-to-day living expenses. If your case qualifies as CNC status, the IRS will not engage in any enforced collection activity. They will not attempt to collect any taxes from you. In fact, the IRS is actually prohibited by law from taking any enforced collection activity against you, and you're not required to make any payments as long as your case is qualified as CNC. The one thing to remember, though, is that the outstanding tax liability continues to exist while you're in CNC status, and the penalties and interest grow like rust on that tax. Also remember that getting CNC status is not guaranteed. The IRS will need to review all of your financials, and they might even do it as frequently as annually, if you're approved as CNC status. The third most common tax relief strategy we implement has to do with a payment plan or installment agreement. The three most common types of installment agreements are a streamlined installment agreement, the partial pay installment agreement that I like, and a direct debit monthly installment agreement if you intend to fully satisfy your tax liability with the IRS. If you do a Google search for "what if I can't pay my taxes?" the first thing that comes up after the first 2 or 3 paid advertisements is the IRS government irs.gov website that says, "What if you can't pay your taxes? IRS." If you owe $50,000 or less to the IRS, you may qualify for a self-service style installment agreement. If you're having difficulty, and I mean financial difficulty, you may qualify for what's known as a partial pay installment agreement. You might be asking yourself, how do I qualify for that partial pay treatment, and what are the benefits? Well, I went over the partial pay installment agreement in a previous video, but it all comes down to how you convince the IRS to say, this is an agreement that we like. And it's all about knowing how to use the Internal Revenue Manual. And that's like the Bible to people who work at the IRS. That's their policy and procedure playbook, so to speak, and paying particular attention to Section 5.14.2 to your advantage. You see, not everything is as it seems, or more appropriately, they don't spill their guts out in the instructions for every form that you fill out for the IRS. Internal Revenue Manual 5.14.2.2.2.2e says, and I quote, "It would impose an economic hardship on the taxpayer to sell property, borrow on equity in property, or to use liquid assets to pay the taxes." It's one thing to have an understanding of which tax relief programs are out there if you owe the IRS or the state, but it's another thing to take action. Obviously, the IRS isn't going to tell you which one of these programs or solutions is best for you in your particular situation. They might not even tell you about anything about these options that I've covered at all. You see, it's their job at the IRS to protect the government's best interest, not yours. They often rush people into a full payment installment agreement, and fully paying your taxes is not a tax relief option. That's merely paying your taxes. If you would like to schedule a free 30-minute consultation with me or one of the former IRS revenue agents on our team, click on the link below or call me at 763-477-4205 to schedule your free 30-minute consultation with a tax professional. My name is Josh Webskowski with Best Tax Pro. Thank you very much, and I hope you like and subscribe to my YouTube channel. Have a great day.